Recipes for technical trading success in Cook's Kitchen.
Have you ever made money on Chinese internet stocks? I have, but I've also lost money. Today we're going to talk about the bubble, the beauty that is Chinese internet stocks. First, let's take a look at what some of the top performers have done this year. I've pulled up a performance graph here from StockCharts.com, and I'm looking at some of the big names, and I've got them ranked by performance. Weibo, you may know, is their microblogging site. So it's social content and chat, but Weibo stands for microblogging. There's one of my favorites, Alibaba. We're going to talk more about Alibaba. Listen, I'm not an expert on all these stocks, but I do have some authority on one in particular, and that's Alibaba. And we'll get back to why they're so important and why they could be the gateway to China's 600 million strong middle class. All right, going back, looking at the performance here, YY up 70%. Again, this is year to date, so just some amazing runners here in Chinese internet. JD, I should say YY is like, it's a unique animal. It's communication, like social communication, chat, texting, video. So it's kind of like Snapchat. So very active platform for Chinese youth to communicate. JD is a lot like Alibaba. It's a storefront like Amazon. Sina is how would I describe Sina? Well, it's like Baidu. It's a Chinese internet portal. So it's it's like a Yahoo or a Bing or a Google. BitAuto, here's one. BitAuto, I don't know if you know, it was the online platform for buying cars in China. I love this stock. George Soros was a buyer a few years ago. I hopped on, but I could rarely ever make money on it. It was just so hard to trade. I thought they really had created a platform that was facing the customers who wanted to buy cars, who were searching, and it served the dealers to get access to those customers. But you'll see in a minute. I'll show you. It was hard to trade. Tencent is a behemoth. I don't even know that much about this company, but it's a $350 billion company. Tencent. The ticker is TCEHY, and they're like Baidu in terms of search, but they do a lot more. So they're a whole portal or a platform with lots of different communication platforms and offerings and media and that kind of thing. And anybody who wanted to be an investor in Baidu, Tencent was really the way to go. I'll show you that in a minute. NetEase is all about gaming. Terrific performance there. I'll go back. So again, we're just looking at year to date, but NetEase has been really strong. Ctrip is their TripAdvisor or their travel portal, so to speak, and there's Baidu. Now, so let me show you let's go back. Let's see 713 days here on stock charts, which is probably, if I'm looking at, these are trading days, 250 trading days, it's almost 3 years. So here you can see BitAuto's a big loser over that time frame, down 64%, Baidu down 17%, and there's Tencent up 133%. NetEase up 260%. Weibo up 246, and there's Alibaba up 126. So that's the long view. Let's see just in the past year. Again, Tencent up 56%, Baidu only up 15%. Tencent was like the sleeper giant in Chinese internet web portals that you had to buy. All right, so why do I like Alibaba so much? Well, this is a company that, we call it the Amazon of China. For that matter, you could call Jack Ma the Jeff Bezos of China. He's doing amazing things, and I'll tell you why I say that in a minute. Last month, he came on tour in the U.S. and was just talking about the platform and all the exciting things that they're doing, and they have so many different things going on with, everything from their stores and payments to the content and media services. But he was asked, what's your agenda here, Mr. Ma? Did you come to the U.S. to get U.S. consumers to use Alibaba to buy Chinese goods? And he said, no, completely the opposite. I want U.S. small businesses to learn how to use Alibaba as the gateway to the Chinese middle class. And that, that's just a genius plan, because the Chinese middle class could be as strong as 600 million, and Alibaba is the gateway there. All right, so we've looked at some performance stuff. Let's go to Zacks.com and see how I put this together as a portfolio. So I just took these 10 names. Actually, I don't have Tencent on here. I've got Sohu on here instead. Sohu is like a $2 billion media search and gaming company. Not really that important compared to Tencent, obviously. But when you make a portfolio view on Zacks, it's really a great idea if you're building a portfolio or you want to compare any companies. I'm just going to run through some of the things you can do here. Obviously, we can look at the Zacks rank real quick. We can look at growth, which is always nice to look at. I'm going to rank these by the past year's growth. And you see Weibo up there, 600%, JD, 200%, BitAuto, 200%, Sina, almost 200%. Baba's down here at 95%. I'll take that. And another thing we want to look at here while we're on the growth view is when they report. We're going to get a lot of these earnings in the next month here. Starting next week, you've got Baidu, then Sohu, and you get into, I'm looking forward to Baba on August 10th. So the other thing I want to tell you about Jack Ma, why he could be the Jeff Bezos of China, is because he was just invited this week, yesterday in fact, to the Commerce Department, which I think is run by Wilbur Ross, right? Headed up a U.S. business summit. Let me see if I can find it here. Oh yeah, here's the story on CNBC. So Blackstone's Steve Schwarzman was a host, and Jack Ma was invited. It was a U.S.-China Business Leaders Summit. And some big names there. Jamie Dimon was there. Mary Barra from GE, from General Motors rather. Ginny Rometty from IBM. Just tons of important people. So what's cool about that is that Jack Ma gets invited to this because, he's considered an important Chinese business leader. And that's really good that they're having, these kinds of positive conversations to promote Chinese-U.S. business relations. Because if Jack Ma is going to pull this off, be able to allow U.S. small businesses to sell into China using his platform, it's going to be huge for Alibaba and great for small businesses here. I pound the table on a stock like Facebook. By the way, I own both Alibaba and Facebook for my Zacks Taser portfolio. And the reason I talk about the Facebook revolution is because what they were able to create by allowing small businesses to create custom, beautiful ads, target them to an audience, control their ad spend, and then get analytics performance to find out what's working. So, that's liberated the small business. That's why Facebook is going to do over $35 billion in advertising revenue this year. Alibaba has a slightly different model, but same concept, is giving the small business person a chance to sell around the world, right? Whether it's a physical product or a digital product. All right, so back to the Zacks portfolio manager here. I wanted to show you, we can also, so we've been looking at the growth page here. We can also select value and do some value comparisons. We can look at trailing 12-month PEs. Ctrip is profitable now, but a trailing 12-month PE of 1,921, and their forward PE is 140. So it looks like the growth is there. In any one of these too, you can just hover over the symbol and get a quick snapshot of the market cap. So if you didn't know what the market cap was for any one of them, where's Baba these days? 360 billion, 393 billion. Well, that's because it keeps making new highs. I've owned Baba for the Taser portfolio from near $100 and have seen no reason to let go of it, or Facebook. I think Alibaba is the one to own. So I don't know a lot about these different companies. I wish I had Learned more about Tencent a year ago. I knew something was wrong with Baidu, that the growth wasn't there. But I focused on Baba, and I'm glad I did, and I'm going to continue to own it. It's going to be a $200 stock next year. We'll see. This earnings report will tell us a lot. Let's go back to a couple charts I want to show you here. I'm just going to pull up what Weibo and Sina did on May 16th. So that was this big jump here. They both reported on May 16th. So this is Weibo launching up from 65 bucks. And then this consolidation, and boy, this barely filled the gap, and this was the one to buy there. I may still look at Weibo again. And then Sina did the same thing. May 16th, big gap up. You know, they both reported extremely strong sales growth, and same pattern. Look at, barely pulled back, couldn't even get near the gap, and so Sina is really strong. Now let's look what Baba did. Now, if you didn't understand the Baba story, you might have been inclined to think, oh, you know, they're not doing so good. Here they were. When they reported earnings on May 17th or 18th, the stock actually dropped down, back down into the teens. And I knew that this was a possibility. And I said, be prepared to buy it at 115. And you had about 3 minutes to do it on the open, and the stock has done nothing but go higher since. You can see here. Well, it ground a little bit, and then this big gap up for Baba was when Ma came to town last month, and he said, "Hey, you know, we think our revenue growth is going to be north of 45% this year. We think it's going to be 45 to 49% growth," and that's when Wall Street woke up and just popped this stock. You know, and here we are, just continuing to make new highs. So the only other thing I wanted to show you on Zacks.com is if we could look at the pricing consensus chart, because I just want to show you how you can do a quick comparison to see what the earnings growth is, you know, what the earnings trends are of any given company. So here's Baba, number one rank, still just continues to be. And if I scroll down here and pull up the pricing consensus chart, this gives you a snapshot. It's comparing, it's plotting price history against annual earnings estimate, the consensus. So you can see, you know, 2016 was a little choppy. But they finally came through when they probably blew out their fourth quarter numbers for 2016. And then look at 2017. It's just the estimates just keep launching, plateau, launch again. You know, and that's that's because this is, you know, Baba's a big machine. It's going to become like Amazon because they're also doing cloud services like AWS, and they'll keep surprising. You know, they've got like probably 15 different businesses, several different segments, and so there's you can almost think of it as what's the unknown. It's not something to be afraid of. It's what's going to be their next revenue surprise. All right, so I showed you the earnings, pricing consensus, value. You know, obviously I'm a big Alibaba fan, and I think it's the one with the least mystery because it's the most like Amazon, and they're also executing almost as well as Amazon for China. Tencent is probably another, but I need to learn more about them. And I think you still can. I think you want to look at a lot of these different companies, but probably Tencent. NetEase, they're doing something terrific with gaming. That's, you know, that they must just have this captive audience for their gaming platform. And then YY is sort of an interesting one. You know, you compare it to Snapchat and Weibo. Those are smaller ones, but Baba is also duplicating those services. So I think that you know, the safer play for me has been Baba and will continue to be so. All right, so I hope I shed some light on some of the internet names for you. You know, create a portfolio like this on Zacks.com so that you can track their metrics and do the side-by-side comparisons of all the good stuff that you like to do, whether it's growth or value. All right, thanks for joining me in the kitchen.